Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, hot off the press, we present some statistics on the TTNGL additional public offering. Investors would recall that the Honourable Minister, in his mid-year budget speech, spoke to the issue of the TTNGL, and this has now come to fruition. Let's look at some of the particular statistics and what does it mean for you as an investor. Let's talk about the offer. What is it about the offer that we need to know? Well, first of all, the purpose is to partially finance the $16 billion or so fiscal deficit of the government of the Republic of Trinidad and Tobago. What are the shares being offered? Well, the shares are B shares of TTNGL in the amount of $40,248,000. This is the remaining component of the B-class shares, which amount to, in total, some 116 million of the 154 million shares that are available. The remaining number of shares, 38.7 million, constitute the Class A shares, which are not up for offer. The offer price, $21. Expected to be raised some $845 million gross. This is prior to any expenses in the amount of 1.4%, as noted in the prospectus. GOT will be down, through its nominee NGC, will be down to about 25% of the total shareholding constituting in all the Class A shares. Let's see what's next that we want to talk about, which will be the timetable for the issue. Commencement of the offer is actually today, hot off the press yesterday. We got the prospectus and were able, in a very short period of time, to put some of these thoughts together. The final date for the lodging of applications, which means that you have about 3 weeks from the commencement of the offer to the first closing date, which is the 28th of June. The offerer has the ability and has the flexibility to extend the offer, but the first closing date is the 28th of June. Electronic transfer of funds, of refunds on the 19th of July, the expected transfer date of the shares 19th of July as well, and notification of allotment on the 26th of July. What's next? Well, let's look at what this IPO or this APO, this additional public offering, means as compared to the IPO. In the IPO for TTNGL, which was the initial public offering, some 75 million shares, or Class B shares were on offer. Now we have 40 million shares on offer. And let's look very closely at this particular pie chart. What is important is that 60% of the issue goes to individuals firstly. This is 24.148 million shares. And then if there is an undersubscription in that area, the remaining shares, those that are undersubscribed, goes to the next bucket, which is the mutual fund bucket, yellow on your screen. And then the next component, in terms of the cascade down, if there are any surplus shares post the subscription, it goes, of course, to the pension funds, the credit union, the cooperative societies, and then afterwards the NIB, and then to other companies. So what you can see is that there is a cascading down. One, the intent is to have the broadest possible participation by individuals, hence the 60% that is made available to individuals, and then that cascading down as it goes. So let's look next at what has been happening to this share price. This share has been traded on the Trinidad and Tobago Stock Exchange for some time. But let's look at what has been happening since December 7th up until the current time at the closing or the opening of the offer this morning. What you can see then is that the share price in December, early December, was at a figure of some $22. And this share price, the low point in terms of the share price, was actually in January when that price fell to $20.52. And it has been trading up to a maximum of $23, which took place sometime around March, and has been within a fairly narrow range, closing at $21 on Friday. And this is the price at which it is being offered. Then, of course, the question is, what does it mean? What does it mean to you in terms of value? Well, the offer price is at $21, as we have said, and some of the metrics that we would normally look at would be the price-earnings ratio, a market-to-book, trailing dividend, yield, as well as the trailing dividend per share. And let's see what's happening here. We spoke to offer price. The price-earnings ratio is at about 15.8 times. That is the price to the trailing earnings of the stock. And the market-to-book, strangely enough, is bang on at about $21.07. So the market price to the book value of the stock is about 1 time. And the trailing dividend yield, 7.14%, which is the dividend over the past year as a percentage of the price. Now, this is the highest dividend yield on the Trinidad and Tobago stock market at this point in time. It is the highest, where the average has been in the region of about 3%. This is an extremely high yield. And of course, the trailing dividend per share in a 1-year period, the last period was $1.50. Other factors are, one, that there is the opportunity, or the possibility, I should say, for these dividends to be paid in US dollars at the discretion or at the determination of the board of directors. A lot of things to think about in terms of this particular issue. For the individual investor, there is the opportunity to be first in line to participate in these shares up to the extent of 60% of the issue. And I think that this is actually a good opportunity for investors. We'll talk more about valuation and the issue of shareholding and shareholder control in the issue when we do a more detailed evaluation of TTNGL at a later stage, possibly in our next edition next week, Monday. This has been the Bourse Report. Subhash Ramkilawan, have yourself a wonderful investment week.